we talked about NIO a couple of weeks ago and how I'm kind of turned on by this stock. This is the Chinese manufacturer of the electronic car, the Chinese EV contender. And, the stock kind of got decimated with many of the Chinese stocks when, the Chinese government was starting to be a little bit oppressive. But it's been going sideways, which makes it a fantastic premium sale. And the reason why I wanted to highlight it is we talked about a couple weeks ago buying some of the NEO stock or buying some replacement call options instead of buying the stock, buy some deep in the money, far out in time call options. Well, now is the time to be selling premium. I mean, the way that we look at this is we look at our channel that we defined. So I've got my little channel here between about $19 and $21. And I put a little ruler on here. I'm just using the off-the-shelf Fibonacci price retracement lines here. And if this thing starts to trade heavily above 2178 when it reverses this 38.2 or 40% retracement line, then what I would do is just take my profits. But it didn't. It kind of topped out there and it's on its way back down. Now is the time for us to be selling premium and buying protection against this symbol. And so what that's going to do is the premium is going to be able to give us some income. It gives us a kind of a dividend against NEO. And the protection will protect us from NEO falling too far before it regains its footing. But at the same time, that protection, if we buy it now, we're going to be buying it at bargain basement prices. And that way, when it does bottom out and it starts to go back in our favor, we can sell that protection. It did its job, it protected us, but we can sell it at a nice, healthy profit, adding to the economics of the position. So now is the best time to sell premium. We're going to get the most for the premium and we'll be able to sell the protection. So to give you some examples, for the premium, I want to sell near term. And so it looks like
Can I ask a quick question?
absolutely.
Why is it the best time to sell the premium?
Well, that's a good question. So premium, in this case, we're going to be selling call premium. And so as the underlying symbol price has gone up from where we initially bought it, that call premium has gone up as well. The call premiums move in the same direction as the stock premium. So when the stock goes up in price, the calls go up in price. So if we want to sell calls, now's the time, where the stock kind of finds a top and then starts on its way down. That's the highest price you're going to get for that call. So now is like a perfect time to be selling it when it's up here at the top of the channel because the calls are going to be really expensive. At the same time, we're going to buy some protective puts. So our protective option is going to be a put with a strike price down here, and puts behave opposite of the underlying symbol. So as that call has been going up in price with the stock, the put has actually been going down in price. So we're going to be selling the call at its highest price that we can get for it. And we're going to be buying this put actually at its lowest price. I mean, that's exactly what we've been taught to do since we were kids is to buy low. So we're buying the put at its lowest price and sell high. We're going to be selling our call at its highest price. So let's take a look at kind of what options we might be interested in. So we're currently trading at about $20.50. So for the premium, I want it to expire as quickly as possible. Uh, the one that's expiring this evening maybe is too quickly. So I'm going to be looking at the October 21. This one's going to be expiring in about 35 days from now. And if I'm selling the calls are on this side of the chart. I'll probably want to sell this 22.50 and I could get $1 a share. I mean, that's 5% ROI right there. So I can get about $1.05 per share just by selling the 22.50 call. And then at the same time, I want to buy that protective option. And so I want to go out about 3 to 6 months. I'm going to actually January or February looks really good. I'm going to look at the January option and coming back just really quick to the chart to take a reference. I probably want my protection to kick in somewhere around maybe the 1918. If there's not a 19 or 18, 1750. Let's take a look. So there's a 17 and there's a 20. Let's see what we've got in February. February is more traditional. We have a 1750. So if I want to go with the 1750, I'll buy this option knowing full well that this is the cheapest price it's going to be. And because I've gone 3 to 6 months out, time decay is not really going to affect this price as drastically as it would on the near term option. And so this will protect my butt as NIO falls. And then once NIO finds a bottom and starts heading back up, I'll be able to sell that protection for a real nice profit as well. So I'll make money on this on the premium and I'll make money on rolling out the protection. Two sources of income on this pullback. It's really a good position and I wanted to highlight it for today.
Yeah, and the price point